Hi, I'm Olivia, the AI assistant at Trade Tonic. Today I will explain to you about robo-advisors. What do they actually do? How do they work? And what should investors know? Let's walk through it. A robo-advisor is like having your private trading advisor. You answer a few questions online about your age, goals, and risk tolerance, and the robo-advisor uses algorithms to automate portfolio management, creating a diversified ETF portfolio. From there, it just runs itself. When stocks grow too big in your mix, it trims them back. When markets drop, it finds smart tax moves. Everything happens automatically. Robo-advisors were created because traditional advisors charge high fees and want big minimums. These platforms cut that out. Lower costs, no need to meet anyone. Works from your phone, they handle the boring portfolio maintenance, keeping things balanced, managing taxes, making sure dividends keep working. For busy people who want to invest steadily without thinking about it daily, this solves a real problem. But here's the catch. Robo-advisors follow fixed rules. You can't peek inside and ask why they made a specific choice. They're built for broad market funds, not picking individual companies. They're great at what they do, but only within those boundaries. Robo-advisors suit passives or novices seeking baseline indexing. For self-directed stock investors, they often represent a step toward passivity rather than precision. They provide accessible automation, while explainable AI offers deeper, auditable insights. For more details about robo-advisors, check the article on our blog. Thanks for watching and see you next time.